Trading Nut, episode 154.
You know, if you put a squeeze on the market and people find out about it, the minute you start to try and unwind your position, it's like, mate, if you think sharks have got a strong sense of smell for blood and got nothing on a bunch of traders when there's somebody sitting there trying to unwind a position.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to this episode of Trading Nut. We've got Paul Scott on the show, who's a veteran trader from the UK. He's got a story that I trust me, it is a story and a half. This guy went from his dad trading to him trading all the way through his life, through the whole system of trade you could possibly go through, at the end into the retail trader space. Now, we don't just get Paul's story here on the show. We get tons of insight into what actually goes on in this industry. So stay tuned. There's some doozies that drop in this episode. Now, afterwards, we did shoot a video as well where Paul actually reveals one of the key bank trading levels. So if you want to see that, head over to the YouTube channel. It's over there. He also talks about how he trades off these levels, and you can see how he sort of uses them to get in and out of trades. So, guys, that's all coming up here for you this week, just before Christmas kicks off 2022. So thank you guys for watching or listening to the show across the course of the 2021 year. It's been a crazy year for the world, but I do really appreciate you guys for sticking by me and consuming this content, and hopefully it's taking your trading in the right direction and improved it like it's improved mine this year in particular, and hopefully you guys are finding success out there in the markets. Now, other things happening here on Trading Up before we wrap up the year. I should give you an update on this Genius Trader thing. So this is going to be launched late January, early February. In fact, I recorded something last week for it as well. So, guys, that's not far away. So please stay tuned for that in the new year. Now, while we're talking about getting into the holiday season here, if you are following my Robot Builders Club and my Robot Lab, I've got my Happy Singles bot, which is available this December only, up there on the Trading Up website for you guys to follow the performance and see the strategy, learn the strategy, and see how it performed historically. So we're seeing that unfold this December. It's 3 weeks in, and it's actually looking pretty good. So go and check that out over there on tradingnut.com under the robots link. And if you're looking to do something in the holidays, you're perhaps looking to start to automate some of the stuff you're doing, or even just get into automating your trading, or some of it or all of it. It can be a partially automated system or a fully automated system. Then go and check out my Robot Builders Club, because if you come on board, I'll teach you how to do that, and might be the perfect time for you to start a course, go through the whole thing, pop out, start of 2022, being able to automate your trading. All right, guys, that's enough from me. Let's get on with this episode with Paul Scott. It's a doozy. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With CTI, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed. All right, folks, here we are on Trading Up. We've got Paul Scott in the house with us all the way over there in Oxfordshire in the UK. Welcome to the show, Paul.
Thanks very much, Cam. Nice to be on, and hello to everybody listening. Hope you enjoy this, and give it a couple of likes or whatever on whichever platform you're watching it on or listening to it on, and let's see if we can.
Let's see if we can give him a good one. Yeah, we had a chat. We had a good long chat actually, probably for about an hour and a half or an hour last week, just to sort of meet each other and that, and hopefully we can sort of glean out some of those amazing stories that you're able to tell me during that call in the show here today, guys. So this will be something a bit different for you. If even if you have heard from Paul before, we will bring you some different content here. So stay tuned. Right, to start off with Paul. So the guys that don't know you, how did you get started in the industry?
Well, I was very fortunate. My father was a trader on the London Metal Exchange, or the LME, for around about 35 years. He literally sort of started there, I think, in his early 20s. Got taken down there on day one by a guy that he'd met at a party. They said, look, we're open and we're looking for people to sort of come and join us. Dad had never heard of it before. I think previous to that, he was working at a wine merchant's, where for those of you, if anybody are listening, the people that I previously worked with, my dad liked to, bit of a connoisseur of the old vino, amongst other things. But that's obviously where he cut his teeth with it. But yeah, he went down there, I suppose, probably 21, 22, something like that. And then just stayed, loved it, absolutely fell in love with it. And, until he retired. And he asked me, or basically told me, I suppose you could say really, at the age of 16, I'd just left school, probably had about 3 or 4 weeks off, a little bit of a grace period or whatever. And as dads do, he turned around to me and he said, right, my son, what are you going to do with the rest of your life? And I'll be perfectly honest with you, at the age of 16, I had no idea what I wanted to do. I loved music. I loved DJing. I've done that, sort of my alter ego, pirate radio over in the UK and stuff like that, which was always great fun. Maybe to relieve some of the stress and the strains of work and things like that. But yeah, so I mean, at the age of 16, he basically said to me, right, you're going to come and work with me. We're going to get you some work experience. We're not going to get paid. I will buy you some suits, some shirts, some ties and the likes. But you're going to come down, get some experience, and then when there's an opening, perhaps with one of the brokers or one of the banks, we'll look to get you in there. So I suppose I stayed with Dad for about 5-6 months, something like that. And then an opportunity came along at a company called Credit Lyonnais Rouse. Credit Lyonnais French bank, Credit Lyonnais Rouse was a part of, I think it was Alexander Rouse they took over.
And what were you learning from your dad in that first 6 months? Can you remember?
Well, basically how the markets worked, what was it all about? Because as a young guy, it's like somebody would say, what does your dad do for a living? And he buys and sells metal. He didn't really know anything too much about it. And Mum was the same. If you'd ask her today, what did Harry used to do as a job, she'd just say he used to buy and sell metal. She wasn't really too bothered.
Yeah.
So I mean, to go down there and just see this world that you never knew existed it's a real weird thing. A trading floor. This is an open outcry trading floor. This isn't a trading floor so much today as it's all office based. This is literally, we're down on the trading floor, all working for separate companies, all screaming and shouting and talking in languages that you wouldn't understand, as a normal person. If somebody came up to you and said, hey, Cam, cash to three's nickel is, 100 contango.
Right. I would be like going, what the hell?
What does that mean? What does that mean? Or, cash to 3 months copper is trading at 500 back, or deck is trading at, 25 back or something like that. It was completely different. It's not, sort of normal life per se, but it's very, very interesting and sort of learning the ropes in the beginning. I mean, I remember going down there literally on the first day, and you're trying to get your ears tuned in to what's going on, because obviously, you've got lots and lots of different voices all shouting and screaming and stuff. And you're trying to single out, you've got one person that you're trying to listen to, and this person would be essentially giving you a run. Now, basically what that means is he's standing there, he's making hand signals at you, 00 trading, for people that we didn't like, 2 bid, 7 bid, 20 bid, things like that, offered, trading, and trying to work out what those hand signals meant, trying to then sort of copy that and, try and giving other people a run, behind you. These are guys that are on phones to clients, everyone's, they're on 2 phones. They're on phones to clients. Clients are then, telling them what they want to trade. If they want to be trading spreads, if they want to be trading outrights, if they're trading cash, if they're trading 3 months, various different dates. I mean, the London Metal Exchange itself is very unique in the futures market, as in you can basically trade, excluding weekends, obviously, and bank holidays, but you can trade anywhere between cash, which is 2 days forward of today, out to 3 months. And each one of those individual days may have an individual valuation. So you would, at times as well, you would have, a tightness in a market, maybe a bit of a market squeeze, where, you would have the near-dated contracts are worth more than the far-dated contracts. That is the definition, basically, of a backwardation.
And then, how useful is this stuff in today's world of trading? What you know today?
Well, it's still exactly the same. That's the whole crux of it. It still is exactly the same. Nothing's changed. So when I speak about trading, I just want people to not imagine, but just focus on, okay, these markets that you're trading today did not open in the mid-2000s with the invention of computing power and all these weird and wonderful ways that people look at markets and analyze them. The metal exchange itself opened in the 1870s. So, I mean, look, if you just took just a biro pen back to the 1870s, they'd either, think you were an absolute maniac or think you were an absolute genius, one of the two, because they would never have seen it. So you have to say, right, well, okay, but if all of these weird and wonderful methods didn't, just weren't there, how did these people trade? How did this market then go on to become the world's biggest non-ferrous metals market? And of course, it can't be based upon bloody indicators or trend lines or chart patterns that just didn't exist. It's all done on the basis of wholesale and retail. So, if you are a broker or somebody that that wants metal, you're going to buy it at wholesale and you're going to sell it to them at retail. That's commerce. That's how commerce has always worked. And, trading in any market, it's no different. Commerce is basically, you break it down to being cheap or expensive. Cheap, wholesale, expensive, retail. And, we obviously have the beautiful ability when we're trading futures. If we think something is overvalued, we can sell it short and buy it back at a later date, and make a profit. So, you have to look at it and fundamentally understand that trading is actually a rather simple thing. People overcomplicate it for reasons, for me, unknown, because at the end of the day, simple things work. Like I said to you last week, we haven't reinvented the wheel for thousands of years because it works. There's no need to change it. It's a very, very simple concept. But, trading is, and always has been, and it always will be, done on the basis of supply and demand, cheap and expensive. So, people that are looking at markets these days, obviously with the corona crisis and things like that, what's happened to, kind of like the industrial countries, well, obviously production of, metal and things like that, let's use metals as an example, it's obviously where I come from. If production ceases or production grinds to a halt, but then all of a sudden the world gets back on its feet and now there's a great demand for metal. Let's look at the copper market as an example. It's been above $10,000 a ton. It was never anywhere near that when I was down on the LME. So the demand for it has done what? It's pushed the price up on the basis of what? There's a shortage. That's simple supply and demand. That, again, it's got nothing to do. You can't plot that with a Bollinger Band. You can't plot that with an Elliott wave. It's just simple supply and demand.
Okay, so let's jump back into your sort of. You've moved on from there from your dad. You jumped into another organisation. How did that all pan out?
Well, that was kind of good. I mean, I got there the very first day. The guy that had been there, the day I was born or the day after I was born, one of my dad's best mates, a guy called Peter Tuesley, he basically got me the job, but he pulled me aside. I must have been there 10 minutes. And to be honest, I'm crapping myself. This was walking into Credit Union, number 5, Appold Street, behind Liverpool Street Station in London. Beautiful marble building. Walked in there. Sat on the desk, and Pete said, "Right, Scotty, a word." So he took me into, the tea room, and he said, "Right, in no uncertain terms, I don't give a whose son you are. You have got 3 months. If you don't get it, you're out, because I cannot have people sitting on this desk that essentially don't know what they're doing. You're going to be of no value to us." So obviously must have picked something up because I'm still here, and I had a career on the metal exchange and things like that.
Did it get shaky at any point where you were like, oh, maybe where he's going, come on, you got to turn this around, or
I think in the beginning, because my dad, again, my dad was a very, very big character on the London Metal Exchange. Anybody anybody that knows my dad that's listening to this will know exactly what I'm talking about. So I had a very big shadow to walk in, which perhaps didn't make it any easier at times, because maybe people had an expectation of you that perhaps just wasn't you. Do you know what I mean? Yeah. So it was, sort of trying to carve out your own career, which is why I didn't necessarily always predominantly stay with metals, kind of branched out and did other, sort of other commodities and foreign exchange and things like that. But yeah, no, I mean, at times you just think, I am doing the most insane job on the planet, because it's not like I can go home and talk to my mates and go, oh, well, this happened today at work, because they'll just sit there staring at you blankly. What the hell are you talking about?
Because what year was this? How long ago was this?
Well, this was 1994.
Right. Okay. So yeah,
when I first started. So we're going back a ways these days. Back into the 90s. I've been an old fuddy-duddy these days, as the kids call me. But yeah, it's mid 90s. Markets are booming. The dot-com bubble was brewing. It was an exciting time, and it was a great time to be in the industry. I was speaking to a few people a couple of months back about how it's all changed. Very corporate these days, very much driven by HR departments and things like that. I mean, geez, the things we used to get up to, Brian, we'd probably get the sack on the spot these days.
Was it like Wolf of Wall Street kind of stuff, was it?
Not quite on par as the Wolf of Wall Street. But, I mean, just things, people that annoy you in the office, and you'd nick their glasses and stuff like that and shove them in the freezer, and you wouldn't tell them to the end of the day where they were, things like that, or I remember one of the companies we worked at, which was Sukton Financial. The chairs that we had, right, were like this dark blue colour, and you could soak them with water and they wouldn't change colour. Right? They wouldn't change colour. So, you'd have one of the guys would be sitting there going, right, I'm just going to go to the toilet. Can somebody cover my phones for a minute? Yeah, sure. So, I mean, you'd cake this, seat in water and stuff like that. And just wait. The waiting part was great. Because they come and sit back down and then leaping up and out of, chair, effing and blinding at everybody.
Okay, cool. So after the 3 months probation, you got through that and obviously found success. I mean, I suppose, without getting too much into all the detail, I mean, how did things progress from there through your career and to where you are?
Yeah, I mean, basically what you have to do, you have to put your groundwork in, obviously, to sort of progress your career, you have to pass regulatory exams. So I am a CF30, which is essentially what's known as a controlled function. That's up on the FCA website. All professionals must have a CF30 or above. I do have a CF21 or CF26, but that's like the old version of a CF30.
And what do these actually give you? What does this qualification mean that that other people don't?
Right. Well, this basically gives you the privilege to talk to clients, to trade for clients, to offer clients advice. So they may ring you. I'll tell you a story in a minute. They may, they're going to ring you on a daily basis, and you've got to execute business for them, whether that's them leaving you, resting orders in the market, or whether, that's like instant execution or whatever.
But is it something is it like that how to read the market now because you've done this exam, or is it more that you know how to just execute things on the market?
Just execute things, and I have an understanding of what markets are. Do you know what I mean? So, I mean, I remember my dad, he used to go nuts because, out of 300 questions that you'd have, right? So you would have like the regulatory side of the exam, and then, like the trading side of the exam, and he would go nuts because you'd have like 3 questions on the London Metal Exchange, which is where I was. And he's like, well, none of this is bloody relevant to you, and, why are you learning this? And I'm like, yeah, Dad, I have to do it. You got grandfathered out. You never had to take any of these exams. It's kind of like a new thing that came in. But, it took me a few goes, mate, I tell you, because you have to learn it bloody parrot fashion. And then literally, as soon as you've passed it, you're like, right, well, I'm not trading coffee, sugar or cocoa, or, I'm not trading in stocks and shares. So that kind of just gets sort of put in the background. But then as you sort of then get more involved in the game, and call it a game, if you get more involved in the game, you realize very quickly that every market is the same. It's traded and understood in the same way by the people that are trading it at the institutions. Yes, you substitute, different, maybe a little bit of different terminology or contract specifications or things like that. But the principle is exactly the same. You want to buy at wholesale. You want to sell at retail. That is what you're doing. You're also facilitating client business. Something like I said to you.
And sorry, how do they define wholesale versus retail? How would you say they define it?
Let's look at the FX market as an example, right? And I've said this before, and I will say it again. Price and value. That is the key to trading. Price and value. You've got to understand that there are particular places and particular prices at which institutions revisit time and time and time again. People think that the markets are chaos. They're chaotic. They're random. Of course they're not. Who the hell's going to make any money in a market that's completely random? It may look random because of A, how you've been taught to look at it, B, the understanding of, hey, look, there are two different users of these markets. One is commercial. They trade because they have to. What credence do they give on the price that they buy or sell at? They don't. They just have to trade. So that is what is moving these markets on a daily basis, up and down. If you're looking at your charts right this second, it's ticking up, it's ticking down. What's going on? That's commercial business. So you're facilitating that each and every day. That's your bread and butter. That's how you earn commission for the company and things like that. Then you've got speculation. And speculatory users of the market obviously have a hugely vested interest in where they're trading from. Those prices are very, very important to them. How do you derive value? Well, you derive value from what is fundamentally going on right now. So the value of these prices over the years and over the months will change. But that's a dependent factor on what is happening today. But what you'll find is that there are particular levels on charts, which I'll show you later, particular levels on charts that have been revisited all the way since the inception of free and flowing currency rates. So an example that I'm going to show you later, and I have spoken about it before, but again, I'll just reiterate just in case any people haven't heard it. The levels that the banks are using to trade the euro today, that's for themselves, that's for speculation. Okay, they were predefined and pre-existed before the euro even existed as a currency. There are things that came before the euro, the European currency unit, the European unit of account. The levels that were established on there are essentially really copied and pasted over onto the euro.
Right.
So right now, again, people will sit there and go, well, how the hell do you know that, blah, blah. Hey, look, I was there, I did it, I ate it, I drank it, I slept it, whatever. You can sit there and say, well, that's cheating.
And do you think it's like, because it really just amazes me. Like, do you think it was almost like is it just a natural thing that occurs organically in terms of these levels just occur organically and everyone goes, well, these are the levels? Or is it something that everyone in the background is going, hey, like, right, Bank B, Bank A, let's have a chat. This is the level that we want to get in at, guys.
Right. Yeah, again, this harks back very early on, in free and flowing currency rates, because regulation practically didn't exist, let's be honest, right? You've got no instant messaging, you've got no emails, nobody's taping phone calls or anything like that. You can basically say anything on the phone and there's not going to be any repercussions, right? So if people think that banks wouldn't get together and traders wouldn't get together and say, right, boys, and it would have been boys back then, sorry ladies, but it was predominantly a boys club back then, so it's great, things have changed these days, but right, boys, well, I've got a ton of buying to do here and I've got a ton of selling to do here. Why, if we all essentially do the same thing, we can move this market and we can make it move from one point to the next. We have a vested interest in making money. So if we all help each other to make money, we're all achieving the same goal. And that won't be a bad thing. So if people do think, that banks wouldn't work together. Come on. I mean, seriously, come on.
Yeah.
Bloody, and you got to think that's what the pub was invented for, right?
Right.
You're going down the pub after work. You're not even in that environment. I'd seen trades down on the back of cigarette packets in pubs, stuff like that. And you get in the next morning and somebody goes to the back office and they go and see, one of the boys or girls that's inputting these trades, and it's like, right, I did this, and they give them a cigarette packet. And, they're bashing it into, the TRS trade registration system. They're bashing it into there. And, nothing was ever said. What time was this done and where was this done? It was done down the pub at about, I don't know.
That is, well, it's amazing, but it's also, it makes sense. It makes complete sense. And so, I mean, okay, well, let's go back to your story. And so you passed the exam, you had that, then how did things go from there?
Well, I basically from there passed my exams after the Sumitomo copper crisis. I actually was going to go and do my regulatory exams that morning, but we got a phone call from my dad's Japanese office. He worked for a company called Triland Metals, and they left us a message at about 4:00 in the morning that this, they call them rogue traders, but this guy from Sumitomo Bank, Yasu Hamanaka, had basically been fiddling the markets out in the copper market out in the Far East. Essentially things unwound. Don't know how things unwound, but essentially things unwound, and the proverbial shit hit the fan. And I said to my dad, do you think I should go into the office this morning instead of doing the exams? And he went, yeah, I think it might be a bit busy. That's a story for another day. But essentially, we got there and copper was trading at nearly $3,000 a ton in the morning, and by the time we'd finished that afternoon, it had basically halved in value. And so a crazy day. But yeah, so I finally got around to passing these bloody exams, which then opened up a whole new world, because now I could speak to customers, now I could give them advice, trade for them on their behalf, discretionary trade for them and things like that. And again, that just opens up a whole new world, because you're not then predominantly just trading LME, which is base metals. I started at Credit DNA Rouse. I then went to a company called Sugden, which is now Sugden Financial. I went there in 1998, which just coincided with the 98 World Cup, which was nice for me because I managed to get the whole of July off work because I was put on gardening leave for a month. Got there. That was, wow, it was just nuts. It was the best place I've ever worked at. Best place I've ever worked. Sat down there, or got employed by one of the guys that was running the options desk, a guy called Hugh Lefanu. He basically said, look, I want you to come and work for me. I said, brilliant, love to. Had the traditional interview, which was in the pub after work, with a few beers. Sort of put a contract together, went back to Rouse and said, I'm leaving. They said, okay, 1 month's gardening leave. Started with Sugden in August of 98. Again, sort of still clerking deals. But now, sort of progressing upwards again. I was made head clerk. I was then sort of put on the phones. Essentially, there was another guy, Chris Adams, who was working at, so he was the boss of the London Metal Exchange desk at Sugden. He said to Hugh, basically, look, I'd like to take Paul off of you. Would that be okay? And of course, they came to a gentleman's agreement. So I went back on that LME desk there, went back down to the trading floor again. Then I got employed by somebody else that worked at Sugden. It was kind of like an introducing broker, but within the umbrella of a big company. A guy called Ivor Howes. He had a bloke called Mark that was working with him. Mark.
What do you think? Well, if you had to select out of all these companies that you worked for over your career, I mean, what was the craziest thing that you saw happen in that career?
There's a few things, mate. I could get people into trouble.
Yeah, which ones can you say that where you're not going to get anyone into trouble? Are there any you can say that you're not going to get people into trouble? Well, without names. Maybe you could do it without names.
Without names.
Is that possible?
Without names. Okay, so we used to have a certain very big customer of ours who was a big player in the copper market. And we used to do a lot of business for them, a heck of a lot of business, right? And we would sometimes get some really, massive market moving orders from them. But they might ring you up and say, right, I want you to sell me 5,000 lots of copper. So you got to do 5,000 times 25. One lot is 25 tons of copper. And you're going to shift the market on that volume, right? But you'd get the order and he'd go, okay, I'll come back to you with a price. Put the phone down. Right, boys, I've got 5,000 lots to sell. You've got 45 seconds. Right? You've got 45 seconds. They're on the phone. Not going to say who to.
Yeah.
Right? They're on the phone. Then we smashed the crap out of the market. Right, lads, I've got 500 left to go. You've got 45 seconds. Back on the phone. Boom. Market's moved.
And it's just shot up, is it? Or shot down or whatever?
Shot down.
Down, yeah.
Dancing around the office.
Right, so you guys are so you're basically, he's saying you've got 45 seconds to get out of your positions or to, could you short at that point? Or you couldn't short?
Well, we would, that's the thing. So we would have been looking for buyers, right? So if we had a big selling order, we would be looking for buyers.
Yeah.
And
so
account is
and so all the people that you were on the phones to, they're essentially going to lose a bunch of cash because they just bought all this copper at the higher price, or at the higher price.
I'm not even talking that. I'm talking. Oh God, I don't even know if I should say it. You weren't allowed to have personal trading accounts.
Oh right.
Within the company.
Oh dear.
Okay, but there are various other ways in which you could do things. I ain't naming any names, and I'm not naming where I was, and I'm not, put it this way, it was an opportunity for people to make some extra cash.
Yeah,
put it that way.
Okay. Okay, and so let's do the transition to like, I suppose, leaving the industry to going out and trading on your own. I mean, how did that all happen?
Well, I mean, after the financial crisis, I basically said, Rod, had enough. I just can't be asked anymore. And I'd learned a heck of a lot. I'd worked with some amazing people. We traded a raft of different products, base metals, precious metals, foreign exchange, soft commodities, oil, things like that. And just understood it to be all fundamentally the same. So sort of left there, just decided to just do my own thing. Took what I knew, applied it, everything. It was slightly different because you don't have all of the order flow around you. So, yeah, look, I ain't going to lie. I had to slightly change my approach. But then it's just realizing, I think, when you step away from it, that you're not in control. And this is what I say to everybody that I speak to, or, any student that I have, is just realize very, very early on that you are not in control of this market. The market is in control of you. All right. In a sense of, it doesn't matter what you think, what you feel, what analysis you do, market does not have any, sort of, tones as to look at what you're doing and go, oh yeah, that's what I should do. It's going to do its own thing. So you have to be very open to that and say, right, well, how could I adjust what I'm doing, which was at an institutional level, which is trading with a bias, right? Trading with a bias because you have all the info around you, which is totally different as coming away from it, because then it's like, oh, okay, so now I'm staring at a blank wall. I've got no info there. I don't know where the order flow is.
And when you say inflow, so the order flow was the main source of info in terms of when you're at the institution?
It very much is. If you know what I mean, if you've got big accumulative positions that have been built up, at some point, they're going to have to be unwound. And if you sort of, especially when people sort of try to put squeezes on markets and things like that, if you put a squeeze on a market and people find out about it, the minute you start to try and unwind your position, it's like, mate, if you think sharks have got a strong sense of smell for blood and got nothing on a bunch of traders when there's somebody sitting there trying to unwind a position, boom, you just smash them out of the park.
Yeah.
You smash them to bits. But it's a dog-eat-dog world at the end of the day, But yeah, I had to adjust what I did and sort of take a slightly different approach, and said to myself, well, okay, I've traded for a lot of them. I've spoken to a lot of them. We've done a lot of business with them. Let's take a leaf out of the hedge fund fraternity's book, right? Let's sit there and say to yourself, yeah, I ain't in control anymore. So it's not now for me to determine value. If it's not down to me to determine value, and I haven't, I'm not sitting there. Best thing for me to do is to say, okay, so around these levels, I'm used to trading, I'm actually going to hedge. Now, I'm going to hedge this level. Why? Well, because I've got fixed stops either side, which essentially gives me a window around this level for the market to then go and essentially pick and choose its direction or pick and choose its value, whichever one that you want to sort of put it down as, which I'm going to show you later. To do that, because you then have to treat trading as a business. And you then have to say to yourself, okay, well, look, every business out there incurs a cost. So if it costs me X amount here to go and find out I can make X amount down here, I do that deal every day of the week. It's not going to eat too much out of my profits. I'm not bothered about it as long as what I'm looking for sort of from these levels is movement. Now, I don't care if it's up or down. So again, that sort of slightly changed the way in which I thought about things, because then I'm thinking, yeah, why am I caring about direction? All I want is movement. Does that make sense to you?
Yeah, it does. So you want to sort of see a push away from a level in one direction. You don't care if the overall bias is up or down.
Yeah.
Yeah.
So you're basically trading bias neutral, which is obviously a great 21st century saying, right? You want to trade bias neutral, which means you actually don't care if the market goes up or down. It doesn't actually really matter, because you can make money in a market that rises or falls. And, people that I've introduced this concept to and people that I've taught, I've often said to me, the minute I stopped caring about where the market went, it's like a completely different ballgame. I can make money if it goes up or down. Why was I so hell-bent and stuck upon I must get the direction right? Because that's the thing, Cam, isn't it? If you are trading with a bias, you have to be right.
Yeah, that's the thing you do. Yeah, if you say, well, my daily direction is up, and you're only taking buys, if the whole day goes down and there's 3 hours of up or something, you're screwed. Or you're not, or you're gonna absolutely screw yourself across the whole day. So it's a great way to look at it.
Yeah, it's a different concept, but that's just the thing. It's just saying to yourself, mate, you ain't in control. The market doesn't know who you are. It doesn't. Personally, if you did, you probably wouldn't give a toss, because that's just the market. But then again, that's another thing. What is the market? It's human beings. So, again, it's what I say to people, when you're looking at a chart, regardless of what it is, forget what it is, because that doesn't matter. It could be anything. What are you looking at? What is a chart? What does it really represent? That represents human behavior over time. And, you've got to get into the mindset of, right, what were these people thinking at the time? Was this product cheap? Was it expensive? Did they want to buy? Did they want to sell? How many times have we got back to that level? How many times has it moved away from this level? Either up or down makes no difference. But that's when you start to really realise it's not what I'm looking at that's important, i.e. euro, dollar, gold, soya beans, whatever. That part doesn't matter. It's what you're looking for. Now, once you understand what you're looking for, then you start to see structure in the market. Then you start to flesh it out. Then you understand, oh, hold on a minute. People used to, they love to use this term, the trend is my friend. You only like that because it rhymes. Right?
That's brilliant.
Okay? You like it because it rhymes. Can you tell me when it's going to start? No. Can you tell me when it's going to finish? No. How the hell is that my friend? Markets don't trend anyway, mate. They range. Right? They range between levels, cheap or expensive. That's what they do. it's not like A to B and A to B. Do you know what I mean? It's not like that. But they will range, and then something will happen. This is what I mean. Fundamentally is where you derive value from. So something that was maybe expensive a few times in the past, when you get there now, it's like, well, hold on, something's changed fundamentally. So the value of that price actually now isn't expensive. It's cheap. So then what we'll do is we'll break above that level. We'll close above that level. The level at the bottom then becomes cheap, and the level at the top becomes expensive. And then we range. And then if something happens again, we'll either come down a range or we'll go up a range. Does that make sense?
Yeah.
Yeah?
Yeah.
And that's how markets function. They don't trend. I mean, it's all about perspective as well. If you're sitting there looking on really sort of short-term time frame charts, mate, you're just battling against commercial business. What are you doing? You've got no idea where the market's going to go to, because you've got no idea what anybody's customer is going to say when they ring up. Right? Again, this is one of those things, mate. You're my customer, right? Your phone line is ringing. I pick it up. Hi, Cam. Hi, Paul. After that, I'm screwed. I don't know what you're going to say. You could say, buy as much as possible, sell as much as possible, do nothing. Do you fancy going out for lunch? Want to meet up for a beer afterward? I literally have no idea. So if I don't know what he's going to say, how on earth are people trying to decipher that on a chart? You can't. Do you know what I mean?
And so what time frames do you recommend, like, people look at then to try and avoid that commercial wash?
As much history as possible, mate. As much history as possible. But you've really got to fundamentally understand, and this amazes a lot of people. I just say to people, look, there's 3 candlesticks. They can only do one of 3 things. That's it. And people are like, sod off, it can't be that. It can't be that. It is.
Yeah.
If you just break it down, mate, just break it down. It really is so very, very simple.
And so back to the time frame thing, what I meant was, like, in terms of if you were looking at a chart time frame, what time frames would you be going down to as the lowest? Again,
well, this is the thing. Time frame. I don't look at time as a concept. Time there's no consequence for me. Prices. So the price is the same on a 1 minute chart as it is on a 1 month chart. What you've got to fundamentally understand is, which prices do I want to be trading from?
Right.
Yeah.
So yeah.
That's the thing. And this goes back to be able to essentially read that human behaviour on a chart. It's kind of like I said to you the other day. It's like a language. Obviously, it's not one that we speak, but it's one that we can understand. And it's universal, so it doesn't matter if you're out trading the Nikkei in Japan, or you're trading metals in London, or you're working for you're hedging for Mount Isa in Australia. Makes no difference. But it's price, and this is the thing. If you ever look at pictures of trading floors, right? Find me the guy that's sitting in front of his desk. Right, in front of his screen, plotting all of these things all over. No, that doesn't happen. Right, if you look at all you see is what? Price. That's all that's there is price.
Right, okay, yeah.
So you already know in your head where you want to trade from.
Yeah. Yeah.
Right? Because why? Well, because that's where you've always traded from. And that's where that's where these big orders are going to be, because everybody in the know is essentially trading from the same place, right? And then, like I said earlier, they have a vested interest in making that market move from one place to the next.
Yeah.
So if you already know that in advance, and again, I'll show you on the chart, and obviously I've shown a lot of people before in the past. But this is the thing. If you map that out on a chart, you automatically already know where you want to trade from before the market gets there.
And what you're saying is you don't know if you're going to trade up from it or down from it. You're going to hedge that level. Yeah. Okay. Yeah. And what about what markets are you trading now that you go on retail? Are you still doing metals or? I mean, that's just ingrained in the brain, mate. That's in the blood. I can't help that one. Do you know what I mean? I cut myself open and have a bit of bloody copper come out or something like that, so still, sort of keen on metals, precious metals.
foreign exchange. I'll trade the majors on the foreign exchange just on the basis of liquidity. I want a market that's liquid, highly liquid.
Yeah.
Again, one of those great sayings, isn't it? People go, "Oh yeah, well, volatility creates opportunity." To lose money. Yeah, to lose money because you've got a lack of liquidity. If you can't get out of a position, mate, you're screwed.
Yeah.
And that
And
comes at highly volatile times.
And talking about volatility, I mean, do you do anything in the crypto space? Have you dived in there, or you don't feel the need to?
Oh, God, I tell you what, I was literally having a chat with one of my mates last night, right? Jay McDonald. Hello, Jay. I know you're going to watch this because he said he'd watch that, right? So, yes, you put on a few pounds and lost a few bit of your hair, mate. Joking. No, we were literally just talking about this last night, and because I thought somebody had hacked his Twitter account, right? He just keeps going on about Bitcoin.
Oh, right. Okay.
Like, he keeps going on about Bitcoin. And I'm like, well, me and Jay used to trade nickel back in the day at Sukden Financial. He was kind of like the first one that kind of really took me under his wing. But yeah, I mean, he put on his Twitter. Basically, I sold my Bitcoin just above the all-time high. Back when it spiked up to about 20,000. He said back to all-time high of about 18,500. So I sent him a message, basically saying, "Oh, did you sell it to Bolt?" Right now, Bolt was the nickname of one of our clients. He would always call us up. He'd always have prior knowledge. I ain't going to say where he got it from, but he'd always have prior knowledge. I just want to buy this day and I want to sell this day. All right, so don't forget this is, metal exchange, right? So you can trade it all of these days. In the end, we just used to pick the phone up and go, well, how much is this going to cost me? Right? How much is this going to cost me? Because whatever you sold it to him for, it would skyrocket. Right, and he'd always make a bloody fortune. He'd always make don't know where that info came from. Not going to even speculate where that info came from. But yeah, and I was like, "So what are you doing with this crypto? Is that you or someone hacked your account?" He went, "No, it's me." I was like, "Right," and we sat down and we had a good chat for about an hour, and he actually said something to me which actually made me sit there and think, right, maybe I shouldn't be such an old fart. Maybe I shouldn't be thinking of this like an old dinosaur anymore. And what he said to me was value, perceived value. He said, you perceive value in cash because you do something for it and you get paid in cash. So it has an intrinsic value. Gold has an intrinsic value. Everything has an intrinsic value because you believe in it.
Yeah.
And he said to me, look, if enough people believe that cryptos are the way forward, then, mate, there is money to be made. And there is speculation going to occur, which is now you've got, central banks now kind of crapping themselves going, right, well, we've got to do something. I mean, digitalized currencies, it's got to be coming, we can't essentially let this, this decentralized way of money moving around the planet, because we ain't in control of it anymore. At the moment, they're in control, but they're kind of slowly losing that grasp. And they've had it for hundreds and hundreds of years. Do you know what I mean? Talking like central banks and things like that. Right? They've had it for hundreds of years, and it's always been the same people, the same families, the same, factions that have always had control of the world's money. That's now slowly trickling away because a lot of people believe that that's a bad thing, which I also believe it's a bad thing. But to move it into something else where these people don't matter anymore because everybody can access it, everybody.
Yeah.
So now I'm starting to look at it, thinking to myself, am I a bit of a dick for not, looking at it a bit?
Yeah, but are you looking at it from more of an investor point of view or trader point of view? Like trading it or just investing in it? Both. Okay, yeah.
The thing that we said, right, which really interested me, the thing that we said is, we're both sitting here coming from a regulated market structure, right? Every market that we've traded has always been fully regulated, and cryptos aren't. So essentially, you're approaching it as a professional. Why? Right? Because there's obviously different classifications of clients, right? You've got, retail client, professional client, and institution. You get afforded no protection as a professional client. So just that just let people understand that you get no protection. You've got no regulatory body that you can go to and go, hey, look, I lost all my money. Well, who are you going to tell that to? You can tell it to your mates. You can tell it on, on your Twitter page, on your LinkedIn page. You can tell it whatever. But no one's going to come to your aid. So my advice is, just be careful. Don't put all your eggs in one basket. I do think this is the way that the world is going to be heading. But also to say as well, if banks come out with a digitalized version of cash, essentially, so it's now a digital currency, again, right, are we going to completely rewrite the rule book when it comes to foreign exchange trading? No. Are people just going to do the same thing and trade from the same places that they always did? Yeah. It's just a great case of getting broke, don't fix it.
Yeah. I mean, look, it seems to. I mean, like I spoke to somebody from China the other day, or a couple of days ago, and they, China's banned whatever, like all sorts of stuff, and just said to the guy, surely you've got some massive VPS companies that are just creaming it over there because you guys are all like, you can't do this, can't do that, and he's like, yeah. Basically, that's everyone's just on VPS into the rest of the world, and so it's completely open and very hard to control for any government or institution, which I suppose is one of the benefits of it. Now, before we digress too much, there was a couple of other questions I wanted to ask. The banks, you sort of talked about the banks and, these levels and trading Forex and stuff. So Forex, I've heard that the banks no longer have Forex trading floors, and this might be after the time that you've left and stuff.
Yeah.
Because they found it too hard to make money. This is what I heard. It's all hearsay. Have you heard anything similar? Would you even accept that as like a valid thing, given the fact, you talk about these historical levels and stuff?
Well, that's the thing. I mean, for me, I would look at it and I'd say, banks aren't trading foreign exchange anymore. Yeah, all right. Of course they are. They have to.
Yeah.
Have things got more automated? Most certainly. Give you an example. My brother-in-law works at JP Morgan. We were around his house the other week, and he was working from home that afternoon, or that day, I should say. And he basically, he now works on risk, as opposed to kind of like outright trading. So yes, a lot of things have become more automated, but I mean, are banks not trading in the foreign exchange market? They are the market.
Yeah, maybe it's more the fact. Maybe I don't know. It seems odd that somebody said, and I think there's a couple of people have heard it from where they've said like the banks are not. Maybe they're not actively trying to make the profit targets they were looking to make in the past. But that doesn't seem to make sense. Right, because
no, and that wouldn't make sense to me either.
Yeah.
But I mean, proprietary trading kind of died a bit of a death. It got. I don't want to offend anybody by saying it. I can put it this way: it got more corporate, if that makes sense. Do you know what I mean? It very much orientated towards risk. I would suggest, after the financial crisis, has probably sort of come into being more after I've left than not. But I mean, risk then got really clamped down on, because obviously, if you've got people, I mean, this is why I love directing people to watch The Big Short, right? The film.
Yeah.
You got people trading. They had no idea what they were doing at all. But they still actually, a lot of them actually made a lot of money from it. And it was that, again, people not realising, you can have an option on 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 an option. And it just got so big that obviously, we all know what happened.
Yeah.
It nearly collapsed. But yeah, it's one of those things. It wouldn't make any sense to me to somebody to turn around and went, well, the banks don't trade foreign exchange anymore.
Yeah, well, I want to just lob it in there just to find out. Now, let's just go over some of the sort of normal questions that I go through. I mean, we're running out of time here, but I mean, from your personal trading, I mean, like, how many trades are you doing in a week?
Market dependent, mate. It's not up to me; it's up to the market.
Okay, and with the hedging kind of approach, are you looking for sort of set rewards, and how do you manage your risk to reward kind of thing, or does it even exist?
Got targets. See, again, it's why something I always say to everybody, right, you're going to call up your deal ticket, right? What do you know? What you want to trade, what direction you want to trade, what price you want to trade, where your stop loss is. There's only one of them that you can't put your finger on. It's a target. You won't always hit it. It comes down to managing trades, which is a big thing. If you're not managing your trades and you're just saying you have an arbitrary target that it has to hit, otherwise, the trade's rubbish. Really? There is a market saying out there, don't be a dick for a tick. You've got 150, you've got 150 pip trading target. It's at 145. Just take it, because what happens if it gets to 147 pips in your favour and then goes?
And so when you start talking about managing it, I mean, what would you do at like 145 pips and go, well, that was what I was sort of looking for? Are you looking at something specific there to say, maybe this thing's not going to happen?
Again, you're keeping your eye on fundamentals. You're following your trades up behind. I don't like to use automated trailing stops, because at some point you're going to have a news item that's going to make the market become volatile. It's going to become volatile not because lots of people are trading it, more the other way around, that they ain't trading it, i.e. not providing liquidity, which is banks, which means, if you give you an example of non-farm payroll, just crazy business. Non-farm payroll, the banks ain't trading that. They're not providing liquidity for that. The numbers have come out 150,000 better than expected. Retail trading strategy, buy. Where are you buying at? Don't know. Where's your top? Where's your stop? Don't know. Where's your take profit? Don't know. So your strategy is you came out better than expected, so you're going to hit buy. So you see markets fly up, not masses of volume, it's lack of liquidity. Right? So I want to be trading in a market when it's normal. Normal,
right,
nice.
Yeah.
You're going to have that. So again, if you approach your trade management expecting the worst to happen, i.e. you're going to get a very volatile moment in the market, sometimes it will happen, sometimes it won't happen. But if you approached it every time with the worst case scenario in your mind, you'd say, well, okay, well, look, maybe I'll leave my stop at break even for a minute. Let's let this news event happen. Let's let the craziness happen. And then when everything calms down again and gets back to normal, I'll just start following my trade up behind again. Or if something's come out that's like super not expected, right, that'd be about the only time the banks are going to react to this news. Right. Let's just say the figures came out 1 million better than expected. Nobody expected that, right? So the banks will be like, oh, crap, now we have to make a very, very quick readjustment of the valuation of this particular asset right now. If it's just your run-of-the-mill stuff, they ain't trading. They're not providing liquidity. And that, again, that's when, a retail broker is then open to manipulating their own spreads. And, of course, they do that.
Now, what about a trader's mindset? Do you have any sort of special tips that you teach the guys that come through and learn from you?
Expect the worst. Always expect the worst. If you expect the worst, anything other than that's a bonus.
Right. That's right. Yeah.
Do you know what I mean? Expect the worst. Because if you, as a trader, you should just look at it and say, right, not how much money can I make, how much am I willing to risk to make more? How much can I stomach? That's more to the point. How much is this going to cost me if I screw it up? But the introduction of hedging also kind of negates that, because you are mitigating your risk by hedging. So if you approached it knowing every single time that one of those trades can't work, again, that's a totally different mindset. Because you're like, okay, I've pre-prepared the mind for this. Okay, so one of those can't work. Okay, so when I get stopped out on this one, have I lost any money on this one? No, because they've cancelled each other out now. But now if that market's now picked its direction and it starts to rise or fall, depending on, which trade's working, I'm cool with that. I've lost there and I've made there. That's okay. I might have thought that this market was going to bounce on this level. It didn't. It went straight through it. And you'd sit there and say to yourself, thank God I hedged that.
Yeah.
I got it wrong.
Yeah.
So that's the thing. You can make money by being wrong. It's okay to be wrong.
Yeah.
You can't be right all the bloody time.
That's some great advice. I like that. That's perfect. Now, let's go through a couple of quick ones here. So, do you have a recommended book or resource that people could pick up and or go to?
No.
Okay.
I honestly, the reason being, people have said to me, have you read this trading book? And my honest answer is, without sounding like an arse, is why would I read it? I've been there and done it. I don't.
Yeah.
Do you know what I mean?
Yeah.
I don't need to
You've
read
lived it.
It's,
Yeah.
Yeah. So it's a different experience for me as somebody as opposed to maybe coming from the retail world and doing really well and being really successful, and they found other people's sort of thoughts and insights as an inspiration or something that they could fall back on. The difference to me is I had real life experience. Do you know what I mean? So without coming across as an arse, no, I don't read trading books.
Yeah.
I might read something like Liar's Poker or The Big Short, but again, that's approaching it with that's a story about markets.
Yeah,
but,
exactly. Okay, what about a preferred broker and trading platform?
I'm a firm believer in you trade with who you want to trade with. You trade on what platform you want to trade with, whichever one is more comfortable for you. Maybe some of the younger guys are more comfortable trading on their phones, and then you might get old farts like me are more comfortable trading on a computer. It's do you know what I mean? It's horses for courses.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100k. You can learn more at hankotrade.com or just click the link I've put in the description. Cool. All right, do you want to walk us through the worst trade you've ever had?
Worst trade I've ever had. I remember sitting pretty in the euro, which is going back a few years now. I was probably about 200 pips to the good. Beautiful trade, actually very close to closing it. And then all of a sudden, at the drop of a hat, the market just went straight down. I'm like, what the hell happened there? Right? And this will happen to people during the course of their trading career. It's called unscheduled news, right? Unscheduled news. The ECB, they had Jens Weidmann, right? Basically the number 2 at the ECB at the time. He said in an obscure interview with a radio station in Luxembourg that the ECB had been discussing about changing their monetary policy and interest rates. The market didn't like that, and it just literally dropped through the floor, right? I'm sitting there thinking, 1 minute, hey, next minute, WTF, what is going on?
How far down did it go from 200 pips up to what was it?
Probably about another 50 down, right? And then so I was like, well, I'm stopped out, I'm done. Okay. Had a really nice...
Yeah. So your worst trade was the fact that you're actually up healthily, and then you got screwed over in like a second. Okay, cool.
Yeah, but let me just finish that off. Because the thing that really pissed me off about this, Cam, was the next day, Mario Draghi, who was then the head of the central bank, European Central Bank, came out and said, we haven't discussed anything like that. And guess what the market did?
Straight up.
Right back up again. And I sat there and went...
At least you knew why. And you weren't sitting there going, what the hell's going on here?
Words were said,
now, to wrap up, what could you leave our listeners with one piece of advice?
Oh, God. Again, without sounding like a complete knob, forget most of what you know. Don't believe what you read. Don't believe what you watch. If you're throwing all of your eggs into the technical analysis basket, please don't. It is a complete waste of time. They are there for analysts at banks to make reports. Those reports go out to clients to induce clients into trading. How do banks and institutions make money? They trade first. They send the report out second. The client acts on the report. The bank's already traded. So when the client starts acting, what are they in actual fact really doing? Helping a bank close out their own bloody position. So, if you want to become an analyst, sure, by all means, for me, an analyst is paid to get things wrong on purpose. So you could follow that route. Strip it all back. Don't put loads of crazy crap all over your chart. Indicators. I mean, that sounded really long-winded, but I mean, indicators, right? I'll say to people, can you name me an indicator? And they go, yeah, RSI, excellent. What is it? Relative Strength Index. What does it measure? Don't know. What setting should it be on? Don't know. Why the hell are you using it? Because somebody told me to. Right, okay. Understand that can't help you, can it? If you don't know how it works. So it's, I suppose, learn the rules of the game before you engage. And I think you can use that in any analogy, in anything in life. Learn how to play the game before you play it. Otherwise, you're not going to do. You're not
going to do very well. Okay, well, thank you very much. Now, before we wrap up, what's the best way for the guys to get hold of you?
I'm not the easiest bloke to find. I don't do any advertising or anything like that, as I said to you the other week. And you're like, yeah, you can say that's true. I do run a website. It's paulscottfx.com. On there's a few previous podcasts. You might listen to them and go, oh, he's basically said the same stuff as what he said here today. I've tried to flesh it out a bit. But if this is new to you, go on there. Don't expect anything flash, because there ain't anything flash. You don't have to sign up to the mailing list. I'm not going to bother you with emails boring the crap out of you. I'm on LinkedIn as well. Again, Paul Scott FX. I do have a Twitter feed that I just don't bother with, if I'm perfectly honest, at Paul Scott FX. I
think they'll be able to find you that way. That's awesome, mate. Look, big thank you to Paul for sharing with us today. Everything we discussed here, along with all those links that he's just mentioned, will be in the show notes. To find them, simply search for Paul in the search box on tradingnut.com. Until next time, wish all my listeners trading happiness and success. There you have, folks. Interview done and dusted with Paul. Now, do remember we did shoot a video after this where he walks through some of the, in fact, which reveals one of the bank trading levels that they trade off, and shows you how he trades it as well. And we see a few other things that are really interesting in terms of how the market is constructed. So head over there, Trading Nut YouTube channel, links underneath this video or in the podcast description wherever you're consuming this. Now, also do remember Genius Trader coming up early 2022. So that is coming up late January or early February. Stay tuned for that. And my happy singles bot, if you want to go and check out the performance, head over there. It's available this December only. After that, the bot disappears forever. You get to learn the strategy in the video I shot. Also, you get to see how it performed in back tests and get to see how the demo test is performing this month. And look, if you were looking to build anything, automate any of your trading or some of your trading, or just even experiment trading ideas, then check out my Robot Builders Club, where we use the FX Dreamer software. I teach you how to do it. I teach you all the strategies I've come up with over 7+ years of using FX Dreamer to show you how to quickly automate virtually anything you can come up with, any idea you can dream up. You'll be able to automate it in a matter of hours, if not minutes, depending on how complex it is. But it's going to save you all this grief from using coders to do it for you, which, trust me, is always a nightmare. You're better off learning these skills yourself. And Christmas, New Year's is probably the perfect time if you're at home and it's cold in the winter over there in Europe or America. It's a great time to sit down, do a course, learn a skill, and then apply it in 2022. All right, guys, thanks for watching the videos and listening to the podcast, depending on where you are. Have a great Christmas, and we'll see you in the next one.